Go.
Hello, Texas. Realtor Bubba Bashall with Gold Financial Services right here in Central Texas. A lot of people hear me talk about non-prime lending, but I want to emphasize to you that we are a direct endorsed lender for Fannie Mae, Freddie Mac, USDA, Ginnie Mae. If we can't do the loan under a government program, then we look to alternative lending. Because in all reality, if you can get the loan to qualify under one of the government programs, your borrower is going to get the lowest rate and the best, most favorable terms. Generally, the lowest down payment. This year, we're going to fund over $2 billion in government loans. Our office headquarters is in San Antonio next to USAA, and I believe we do almost as many VA loans as USAA. As a matter of fact, our processor, one of our two processors, came to us from USAA and is a government lending expert. So all of your FHA, your VA loans, we really hope you'll give us an opportunity to earn your business. But we also have the portfolio lending for that client that falls through the cracks and doesn't qualify for a government insured loan. So I'd like to talk about those with you today. You as a realtor work hard. You spend a lot of time and effort on energy, marketing, money, trying to bring in that client who wants to own a home. And I know for you, it's more than just earning a commission. It's serving a family. The best way you can serve the family is by referring them to a lender that can grant them a credit approval. As I mentioned earlier, we're a direct endorsed lender. And what that means is the government has come in and looked at our portfolio of loans, over 1,000 loans they researched, and they determined that we have the ability to underwrite, close, and fund a loan on their behalf without getting their prior permission. Not many lenders have and utilize their DE recognition, which we do. And that means a lot. It means on an FHA loan, we'll go down to a 500 credit score. You're hearing a lot of people say, oh, FHA requires a 580 or a 620. That's not true. That just means they're selling the loan or they're a conditional lender, not a direct endorsed lender. So when you're referring your client for a pre-qual, make sure you send them to somebody that has the products that will allow them to buy a home. Otherwise, you can't sell a home, you can't serve a family, and at the end of the day, you don't earn the commission. There's nothing more important than taking care of families and offering the best program that is available. So, as I mentioned, we have the government lending, VA, FHA, Fannie Mae, Freddie Mac, USDA, and we're experts at those. But in addition, for the client that doesn't fit, we have portfolio lending, and I'd like to talk to you about that now. Probably the best owner-occupied program, non-government insured, is going to be the bank statement program. This is especially important for that self-employed person. You and I both know self-employed people are going to take every imaginable tax deduction they can. They want to pay as little, they want to pay what they owe, but they don't want to pay a penny more. And I understand that. You as a realtor, same situation. So quite often your tax return adjustable gross income is not going to verify enough information for the home you want to buy. We find it especially in the luxury market. People are taking big deductions. Maybe they had a loss carry forward from the past, and the tax returns simply do not work. Or the tax returns in a luxury client may be so big that it's not worth going through the process. In this case, the bank statement program makes a lot of sense. And what we're going to do is we're going to take either 12 or 24 months bank statements, and we're going to average the deposits. Now listen to what I'm saying. We're going to average the deposits, not the ending balance. So let's say you have a guy who has a little taco restaurant and he deposits $2,500, or make it easy math, $3,000 a day into the bank. That's $90,000 a month. Now, Wall Street investors are a little different on how they calculate that. Some of them will allow you to use all the deposits. Some of them say, no, we know that you've got an expense ratio, so we're going to only allow 50%. But I assure you, the guy who has that taco stand who's depositing $90,000 a month, his tax returns aren't going to verify he makes $45,000 a month after expenses. So the bank statement program allows a borrower to qualify for a lot more. In addition to that, there's no 4506 transmittal summary. There's no tax returns. It's a very, very simple loan program. And by not disclosing the tax returns, a lot of other stuff that ends up being a rabbit trail never appears. For example, you may have somebody in the tax return show Schedule E, a lot of real estate owned. And then you got to say, well, did you sell it? When did you sell it? I need copies of this. I need copies of that. That doesn't come into play. The other issue is children. Tax returns reveal how many children you have, whether you get alimony or child support deductions. Those don't come up. So a bank statement program makes it very simple for a borrower to qualify. Recently, a new bank statement program just came out, 1 month bank statement. So what that means is, if you have a client that you know you want to close and fund in the month of February, in the month of January, the deposits into his account need to equal whatever he's going to show his income as. And it's very simple. I'm not going to give you any homework on this, but it's pretty simple to make sure that you have enough qualifying income if you have the ability to use 1 month's bank statements. The next program that makes a lot of sense for borrowers is the Ability-to-Repay Program. Under this program is if a borrower has money parked in an account, let's say it's in an IRA or it's in a mutual fund, and they've got $450,000 liquid, or let's say they've got $200,000 in an investment account and $200,000 in a retirement account. We can use half of the retirement and all of the investment. So in that case, we'd have $300,000 usable for the ATR program. And what that means is they could buy a house as long as they have enough liquid funds to pay cash and their credit score is over a 600, they automatically qualify for a home loan with no job and no income. Pretty wonderful program. Now, this really comes into play when you have that retired person moving in from California, Florida, Arizona, and they've sold their house and they put $4 million in the bank. They sold their mansion in California. And they want to buy a $2 million house on Lake Austin, but the only source of income they have is retirement from Social Security. So each of them gets $1,600, $1,800 a month. They clearly don't qualify for a $2 million home. But they've got $4 million in the bank, liquid. They are qualified with 25% down and a 600 or higher credit score. They can buy the home. So this is wonderful for self-employed people and especially good for the jumbo home buyer that doesn't want to go through all the tax returns and the rabbit chase that comes with that. Another program we have is asset depletion. Now, under the Ability-to-Repay rule, which is part of the Dodd-Frank legislation, the government said if you can prove the borrower has the ability to repay, then we'll let the lender off the hook. We'll give you safe harbor, which begged the question, what is the ability to repay? How do we know we've ever met that hurdle? So the government came out and said if a person can repay all their debts over a 7-year period, they have the ability to repay. So Wall Street lenders have taken that calculation and said, if the borrower has $2 million liquid in the bank, we're going to divide it by 84 months or 7 years and add that to their income. So you could have a person maybe that doesn't qualify because of debt to income ratio, but they got a lot of liquid reserves in the bank. We can take those liquid reserves, divide by 84 months and add it to the income. Now they qualify. You may have a person that has enough money in the bank that just the asset depletion amount alone qualifies for the home loan. And that way they wouldn't even have to have a job or regular earned income. Another program we have on the non-prime lending side, alternative lending side, is the cash flow program. If you have a borrower who's going to buy a non-owner occupied property and that non-owner occupied property is currently rented, or when we do the appraisal, the rent comps come back showing that there's enough rent available so that the PITI payment is 90% or lower than the rent, they automatically qualify and the property carries itself. It's called the Investor's Cash Flow Program. We have a lot of programs, I assure you. If we cannot get your customer approved, they can't get approved anywhere. I teach for the Texas Real Estate Commission, so I'm very well aware of all the rules and guidelines for Fannie Mae, Freddie Mac, VA, USDA, and if we can't make your customer fit there, we've always got alternative lending. We want to be your lender. Gold Financial Services here in Austin, Texas, our phone number 512-953-7359. We have an overqualified staff that is here to make your job as the realtor easy. The best thing we offer is great communication. When you go to our website, austinslender.com or austinslender.com, think of me, you just click on the button that says pre-qualify my buyer and you put in your information, their information, and any notes. That immediately goes to our transaction coordinator who has been an underwriter and a processor. She knows what she's doing. She's going to get the right information from the borrower up front so that when we get the loan officer to issue that pre-qualification, that is a loan that will close and fund. So we make it simple. Go to our website, austinslender.com. You can click on Pre-Qualify My Buyer. We go to work for you, even if you have a client that hasn't made a commitment to move forward. They're sitting on the fence. You know they need a house. You don't know why they won't move forward. We'll get the answer. Go to austinslender.com. Click on Pre-Qualify My Buyer. Put in their information. Put in notes. Not sure they want to proceed. We'll call out to them and see if we can get the answer that'll help them get off the fence so that you can sell them a home. Our goal here is to partner with you. A great partnership between a lender and a realtor has never been more important than it is today. There's a lot of lending programs available, and you need to know what they are, and we're here to help you with that. A lot of lenders are telling clients minimum credit score on FHA 580. Not true. Minimum credit score is 500. They're going to say, oh, the debt to income ratio is too high, it's 45%. Not true. Debt to income ratio on FHA is 57%. They may say, oh, they don't qualify, they have 2106 expenses. You know, they have a part-time job and it killed their income. We have the ability as a direct endorsed lender to go W-2 only. We're not going to look at that. We're only going to use the W-2 income. Using us as your lender, you're going to close more transactions, you're going to make more money, but most importantly, you're going to make homes available to more families. So please give us a try. Gold Financial Services, 512-953-7359, or visit our website, www.austinslender.com. Have a great day.